Good morning and welcome to Morning Markets from the team at True Potential. Today we'll just look at some of the headlines that were influencing asset markets yesterday, and in particular focusing in on Europe and some of the challenges that we're seeing there from a news flow perspective over the past 24 to 36 hours. Just turning to that, firstly, I think really in terms of the news flow, it's very much being influenced by a number of those factors that we've been discussing for a number of months, and in particularly thinking about economic reopening, the pace of that, how the rollout of vaccination programs is aiding that. And one of the key challenges that we've been seeing in Europe, which we've alluded to over the past number of months, has been the slow rollout of the vaccination program initially. And then over the weekend and into yesterday, we've seen increasing news flow of a number of European countries that are concerned about their use of the Oxford AstraZeneca vaccine. And as such, they've slowed the rollout, or in some instances, stopped the use of that vaccine at this point in time. Now, that will have an impact on the speed at which they vaccinate their populations, but it also will influence the rate of reopening that we can see in those economies. And you can just really see the stark difference here in the chart which we've got on the screen at the moment. And this just looks at the vaccination rates per 100 people. And you can just see there the stark difference where we've got the UK, the US, and then very much lower we've got the EU, with a number that is very, very different to what you're seeing in the likes of the United Kingdom, where we're north of 35 doses per 100 people. If we look at European Union, we've just got above 10. So a stark difference there in the speed of the vaccination rollout. And that's something that I think we will have to continue to monitor, because it certainly will influence economic activity over the coming number of months. I think the other thing just to touch on, yesterday we saw a bit of a rotational environment within the equity market, and by that I mean we saw the Nasdaq, so that more growth orientated market, outperforming the broader market over the course of the day. A lot of that due to a degree of stability in the sovereign bond market post that step out that we saw on Friday. In a number of markets, we did see actually even yields come in a few basis points. In the US, we still remain above 1.6%, and in the UK, we're sitting at around 0.8% on the 10-year gilt. I think it was worth noting yesterday that whilst we saw that stability in sovereign bond markets across most of developed markets, we did see a number of emerging markets where we saw the sovereign bond yield actually continue to move out. And that's something, again, just to monitor over the coming weeks. And that's really a function of what's happening with the strength in the dollar, making emerging market assets less attractive at this point in time. And just that general political risk element that does appear in some emerging markets to have stepped up over the past couple of weeks. And I'll come on and touch on one element of that in a moment or two. Just then in currency markets, really very much a continuation of that theme of a degree of strength in the dollar on a trade weighted basis. And again, this shows the linkages within financial markets, and one can argue that is also attributed to the movements that we're seeing in the sovereign bond market, particularly as US Treasuries become more attractive from a yield perspective to foreign investors. So if we think about a European investor where in their sovereign bond market, you might be getting a negative yield to a slight positive yield. Think about the pickup then that one gets by investing in a 10-year US Treasury at 1.6%. Yes, there's currency risk, but even if we take into account the cost of hedging, it still makes an attractive opportunity. So that is causing some assets to flow into dollars at this point in time, and hence that strength that we're seeing in the dollar. I think really from a news flow perspective yesterday, it was fairly quiet. There wasn't a lot to really get your teeth into and think about the impact on markets. Some speculation around how democratic proposals might change in the coming number of months to think about funding the ongoing infrastructure investment that's required in the US. Some discussion around increases of corporate taxation, capital gains tax, etc. Now, that would mark a step change really from what we saw from the Trump presidency, but also from the taxation environment that we have seen in the US for a number of years. So that's something certainly to monitor. I think at this point in time, really, it lacks detail. And I suppose with everything in the US, it would also have to make its way through Congress, which, as we've seen with many of these things over the past number of years, that comes with its own set of challenges, and how that influences the shape of the legislation at the end of the day. Just the other point, and it links back to sort of the political risk, the political environment in a number of countries. We've typically discussed the risk that technology companies face from a regulatory perspective, and we've sort of focused that on the US when we think about the monopolistic practices that has been alleged of some of these businesses, how that's been investigated in the US Congress, etc. One of the areas that we touched on last year was China and the dominance of some of the platform businesses there, the challenge that Alibaba faced with listing its Ant Financial Group, so its financial business, and how that was stopped effectively by the Chinese government. We've continued to see that in the background, and it's sort of bubbled up a little bit more over the past couple of days, where we've seen commentary made around Tencent, one of the other dominant platforms in China, around their financial business as well, and just this general level of increased regulatory scrutiny that these businesses seem to be facing in China. And that does come with an impact. Impacts the businesses, impacts sentiment, and impacts the market. So if we look at the CSI 300 in China, that index is now down about 12% from its peak at the beginning of February. So it just shows how regulatory change influences sentiment and ultimately influences valuation. I'll leave it there for today, but please do subscribe on our YouTube channel, and I look forward to seeing you again tomorrow. Thank you.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.